Hi everyone, welcome to a new video. So I'm going to be talking about a new news story that came out today quickly. Basically yesterday, Zero Hedge, a Twitter account and website, released a story that alleged that SoftBank was the player that was buying huge call options for individual US tech stocks that had effectively been driving up the market and causing that huge disparity between the rally in tech stocks and the rest of the market. The way this works is SoftBank has been allegedly buying calls on individual stocks. So this gives them the right but not the obligation to buy a stock at the strike price when the date that the contract ends on arrives. So basically, that means that they've been betting on individual tech stocks rallying. Now, there's still a lot of unknowns here about how long the contracts are for, how big the value of the contract were. We know from filings that, according to the Wall Street Journal, it was about $4 billion worth of shares in tech giants, but that doesn't include derivatives. That is just stocks that they bought. So the scale of this could be huge. But the way this drives up the market is that basically you buy a derivative from the bank and you're betting that the price is going to increase over a certain time period. The bank then has to hedge that risk because they don't want to carry it. And the way they hedge that risk is they buy shares. They buy those shares that they've given you a contract for. As the price of these shares increases, the banks have to buy more and more shares because the amount of money they'd have to pay out between the strike price and the current price gets bigger and bigger as the price rises. So it's kind of like a circular system where it's forced the markets upwards and upwards continuously in these individual stocks. And the size of this could be huge. I mean, market players have been saying for weeks now that someone's been buying huge amounts of stock calls. You can see it down here on this FT chart. Single call stock options have been rising rapidly. So that pink line there, you can see it's nearly in line with index puts, which is so unlikely. Market players have been describing it as the biggest amount of stock buying they've seen in decades or in their whole careers. And that's, quite a scary thing that we're seeing, to have bought that many calls at a time where the market's really volatile. We don't really know what's going to happen. It's incredibly risky of SoftBank. Now, obviously, SoftBank's had a pretty disastrous 18 months, 2 years, with the WeWork debacle, with other bets losing out. I mean, they're expecting, I think, around $5 billion worth of losses in the Vision Fund, if not more, this year because of coronavirus and the economic impact. So when you see something like this, it's just a huge gamble, effectively. It's the largest volume in over a decade in calls. Now, people have previously attributed this to retail investors, but there's no way that that market's big enough. I mean, you can see here that the average a day has been 335 billion over the past 2 weeks, and that's more than triple the average from 2017 to 2019. I mean, that's insane, absolutely crazy. It's quite concerning that they're buying this big of a position on what's effectively a gamble. This is really a hedge fund move. As people have commented, this is hedge funds do all the time. It's not a bad thing. The scary part of this is the scale. You wouldn't see these billions of dollars sized positions to a scale that could be completely unknown to us, when anything could happen with the market in the next month, the next 2 months. I mean, without knowing the length of the position they've taken out for, it's difficult to completely show the risk that they've taken, but it could be very high. They're even saying that they think that there will be more buying coming. Even though yesterday, the market fell significantly. The Nasdaq fell nearly 5%, I believe. That would have really hurt SoftBank, but apparently that buying is going to keep coming. They think that's a good time to keep buying. I mean, that's crazy. And you can see here, these are some of the biggest trades I've seen in 20 years of doing this, said one derivatives-focused US hedge fund manager. The flow is huge. I mean, when you've got hedge fund managers saying that, that's really scary. This is what they do. And that's by far the biggest flow they've ever seen. I mean, one banker described it as a dangerous bet. All really concerning stuff. When you've got professionals really being worried about this, then that's surely a problem. I mean, for me, I think this is just a really dangerous risk that I don't necessarily understand from SoftBank. It's almost like a Hail Mary play. You know, they've had big losses this year. They've set up this asset management arm in the last few months, funded with Masayoshi-san's own money, probably to try and recoup some of those losses. I just think it's getting so risky to put billions of dollars into the market at a time where anything could happen. I mean, what if there's a second wave in the next few months? Those options could be worthless. You know, equally, what if there's a government shutdown in the US? That could take the market down. Any number of things that could come out of nowhere. I mean, obviously the government shutdown is less likely now because of news earlier today, but the point is it's completely unpredictable. The market is completely unpredictable and you can't guarantee which way it's going to go. And when you make bets this big, you have to be confident. Now, on top of that, Masayoshi-san, his financial situation is very intertwined with SoftBank. It has been for a long time now. The fact that he has funded this asset management firm with his own money, I find that concerning because a lot of his own money was in SoftBank shares, which were then he took loans against. If that's the same thing, if SoftBank shares are being used to guarantee this money, then that's a very circular situation that, as some commenters have said, could have some grey areas involved that aren't particularly, let's just say, stable. Obviously, this is all conjecture, but when you see news stories like this was from the FT earlier today, who broke the news after Zero Hedge. I mean, it's really concerning. If the market falls from here, then they could be losing millions, billions of dollars at a time where they need all that money. I mean, I don't understand, if you're Masayoshi-san, why you would take a position size this big at a time that is this unpredictable. It just seems like, as I said, a complete Hail Mary that sure has huge upside, but also has large downsides. It's just concerning, and concerning that you could lose money on Thursday and then still be prepared to buy more, but the whale is still hungry. It's hard to fathom that kind of lack of risk management. Now, obviously, Masayoshi-san has previously had some very successful bets. It's a very high profile and really great investing. But recently, in the past few years, things have gone very astray, as I said. Problems with WeWork, with Uber, who's now still not trading above its IPO price, I believe. Lots of different individual mistakes. Wag, the dog walking company that they put hundreds of millions into. A robot pizza startup. Things that you just look at and you go, where was the thought process here? And that's what I think when I look at this as well. It's just so much money to pump into these derivatives without any guarantee. I mean, even if you wanted to make individual bets on stocks, as they have, as their disclosures show, in the billions of dollars, why would you then also go for options? It just seems like a crazy amount of risk to put on. But yeah, I mean, for me, that means I wouldn't go anywhere near SoftBank stock, although I've thought that for a while. You know, I think this year they've pumped the stock price back up through the use of buybacks. That's really a technique that I hate. I think buybacks are great for a stable, well-run business. That has not been SoftBank in the past 2 years. They are using those buybacks to really cover up the frailty of the company, and I think that's a huge problem. It's just really problematic. That's why I would never invest in SoftBank at the moment, and I think the company needs a complete rewriting, possibly without Masayoshi-san at the helm, because these kind of bets, the VC fund bets of the Vision Fund that have been disastrous in some cases, these kind of options, which, to be honest, market players are probably now going to put all their weight behind and oppose. That's normally what happens when big positions like this are revealed. The market goes the other way because everyone else is trying to make money off that one person. Obviously, it's a little bit different in the options case because they don't yet own the asset, but they could still lose a lot of money on it, especially if they're trading in this size. But yeah, I just think, it's a crazy level, and that's why we completely avoid them. Even though they are US listed. I believe they are NASDAQ listed. But yes, anyway, thank you for listening to this video, and please check out my other recent videos on Kenmar mining, a recent investment that I made, and also on Boohoo. Yeah, thank you for listening.